Bitcoin and Ethereum saw a major dump over the last couple of days, but I actually do think that both Bitcoin and Ethereum are ready for a major pump. In today's video, I'm going to explain my exact trading ideas on both Ethereum, but also on Bitcoin. We can see that Ethereum on Friday saw a major pump towards the upside right over here during the Jackson Hole news event. Right now, early in the week, Ethereum has been retracing the majority of the pump right over here. We can see that after sweeping that previous week high right here, Ethereum broke structure towards the downside over here and has been retracing that massive inefficiency that we were creating during the news event right over here. Now, while feeling that massive inefficiency over here, Ethereum has also been retesting this previous bearish inefficiency over here as well, that it was reclaiming during the Jackson Hole news event. So currently we can see that Ethereum is retracing a lot of inefficiencies in price, and while retracing those inefficiencies in price, Ethereum is also coming back to the origin of that move, aka this demand area right over here. Now, while Ethereum for now at least is still holding the demand area, Bitcoin has been taking out that low of Friday, meaning that Ethereum and Bitcoin are forming an SMT divergence. An SMT divergence means that Bitcoin, for example, forms a lower low on price, and at the exact same time Ethereum forms a higher low on price, which is exactly what we are seeing right now. This is what we call a smart money technique for a potential bullish reversal. Now, while you are forming this smart money technique potential indication for a potential bullish reversal, you also want structure to align with price before you start looking for longs. I am definitely still bullish on Ethereum, because also when we look at the 4-hourly time frame, what we can see is that Ethereum, while sweeping the previous week high over here, it put in this major wick. Now we know that these wicks, they are indicating too fast of a price movement. And if price moves too fast, guys, we know that they are likely going to get filled, because there are still unfilled orders being left behind over here, acting as a major drawn liquidity. So I am marking out that 50% wick fill level over here, and I know that sooner or later, this 50% wick fill level that is aligning around $4,887 for Ethereum is likely going to get filled sooner rather than later, meaning that my bias is still bullish for Ethereum for the upcoming week. Now, I'm just looking for local confirmations to position myself long, and I can definitely see a scenario where Ethereum is going to see one more sweep of the low right over here, followed by a potential bullish reversal over here, breaking structure towards the upside. And if I get this trigger, then I will be looking for longs up on the pullback over here, targeting that 50% wick fill level, and I'll be looking for potential execution like this with my invalidation over here, targeting higher levels over here towards that 50% wick fill level. So basically, in my opinion, as long as Ethereum holds this demand over here, and as long as Ethereum doesn't make a new weekly low on Wednesday, and in a little bit I'll explain why, I remain bullish on Ethereum, and I continue to look for local bullish reversal confirmations back towards the upside as long as this demand holds. Because we can also see that in the current range where Ethereum is currently trading in, that Ethereum is currently retesting the point of control of that range. We can see that by far the majority of the volume was traded in this cluster over here, which exactly aligns with that demand as well. So I think this is a pivotal area for Ethereum to hold, and I'm still looking for long confirmations, as I said, as long as it's Monday or Tuesday. Now, the reason for this being is that when I go to the Brighter Data statistical platform and I select the last 18 months of time data for the weekly candles on Ethereum, as you guys can see over here, I can see that 64.1% of the weekly candles form the first pivot on a Monday, 15.4% form it on a Tuesday, meaning that together around 80% of the weekly candles form the first pivot, the first extreme of that candle on Monday or Tuesday. Meaning that if we get a bullish candle, 80% of those bullish candlesticks on Ethereum would form the low of that bullish candle, aka the first extreme on Monday or Tuesday. Now, Wednesday is still possible as well, but as soon as we make a new weekly low on Thursday, I am not interested anymore in playing the local reversal confirmations on Ethereum, because in that case, it's a lot more likely to start forming new lows on Friday, Saturday, or Sunday. So that would give me bearish directional confirmation. So for now, as long as Ethereum is holding this demand, and as long as Ethereum is trading in the time cluster of Monday and Tuesday, and maybe we can include Wednesday as well, but that would be very tricky in my opinion. I really would prefer Monday and Tuesday. In this area, let's also include Wednesday in this case. I will still be looking for long confirmations as long as this demand holds, and as long as we are trading in this time cluster over here. But let's say Ethereum makes a new weekly low to the downside on Thursday, then I just know that I get my directional confirmation, and then we will see new weekly lows on Friday, Saturday, or Sunday. Probably going to target this sell liquidity, and probably going to target this sell liquidity right over here as well for the price of Ethereum. 14 days of access to the best trading community in the space, Tribe Capital. Guys, I'm not here to try and sell you anything, although I am kind of selling you something. $1 for 14 days of access to trade signals, live streams, and so much more educational stuff. And all that you guys need to do is follow the first link in the description down below, and I'll catch you guys there. Now, when we look at Bitcoin, what we can see is that Bitcoin is simply trading in a range where a lot of people are freaking out because Bitcoin is breaking down over here. All that I can see is that Bitcoin is simply trading inside of a potential reaccumulation range, in which we have the first pivot over here with a previous all-time high, our second pivot over here, we formed a third pivot over here, and we can also argue that the candle closes over here on a 12-hourly time frame are providing a beautiful fourth pivot as well, giving us a high probability range. And what I really like about this range is the respect of the mid-range level, which was getting respected all the time, and we can also see that we respected the mid-range level over here before getting this drop off to the downside as well. So pivotal range. And right now, Bitcoin is consolidating and pushing beneath that range low area. While pushing the beneath that range low area, we can see that Bitcoin is taking out some major sells liquidity right over here. I prefer to trade deviations, and especially if the trend is up on Bitcoin, which it still is, guys, on a higher time frame, I prefer to look for potential deviations below the range low and potential breakout longs above the range high up on the right confirmations and up on the right models. Now, currently we can see that besides the fact that it's deviating potentially beneath the range low, we are also retesting this demand area over here for the price of Bitcoin as well. So once again, just like for Ethereum, as long as the demand holds, in the meantime, we are also forming this very strong SMT, as I said, Bitcoin forming lower lows and Ethereum forming higher lows. I want to look for potential reversal confirmations to add margin to my Bitcoin long positions. Now, what we can see is that Bitcoin is currently in a local downtrend, right? Which is continuously forming lower lows and lower highs on the price of Bitcoin. So we can see that right now, the most recent high is the high over here. That high brought us to this lower low over here right now, sweeping the previous low over here, potentially creating a bullish reversal structure over here. If Bitcoin manages to open and close candles above this high over here on the 1 hourly time frame, I have myself a potential bullish reversal confirmation, and you can start looking for longs on the price of Bitcoin with your invalidation beneath that weekly local low, targeting higher levels. Now, once again, just like for Bitcoin, just like for Ethereum, also for Bitcoin, I want this reversal confirmation to take place on Monday or on Tuesday. For Bitcoin, there's no Wednesday included, and in a little bit I'll explain to you guys why. Because if I mark out Monday and Tuesday over here for the price of Bitcoin, and I go to the Brighter Data statistical platform, then I can see that 67.9% of the weekly candles on Bitcoin form the first pivot on a Monday, and 20.5% of the weekly candles on Bitcoin form the first pivot on a Tuesday. Together, this is over 88% of the weekly candles form the first pivot on Monday or Tuesday, meaning that if I anticipate a bullish weekly candle on Bitcoin, I want that low to be formed on Monday or Tuesday, meaning that I'm only interested in playing a potential bullish reversal structure, as you can see on the chart right over here, as long as we form the low of the reversal structure in this red time period right over here, aka on Monday or Tuesday. Now, if that happens, I'm looking for longs right here with my invalidation over here, and then I'm targeting higher levels. But guys, we cannot be bullish if we don't have a clear target. But when I look at the weekly time frame on Bitcoin, I can see two major reasons why I'm bullish and why I expect price to trade higher. First of all, we can see this weekly sweep over here. But while sweeping the previous high, we can see that Bitcoin put in a major wick over here on the weekly time frame. Once again, guys, we know that these wicks are a major draw on liquidity, and I'm going to mark out once again that 50% wick fill level, which is around $122,000 for the price of Bitcoin, and that will act as a major draw on liquidity. And also the weekly candle of last week created no wick to the upside over here. That one is aligning around $117,500 and will also act as a major draw on liquidity, because we know that every single wick, every single candle needs a wick to the upside, or it needs a wick to the downside. Now, a lot of people are always asking me why. Why is that the case? And I have a decent analogy for this one. Being a former pro football player, it's like wanting to kick a ball without a run-up first. If you have no run-up, you can't give any speed to that ball for a reliable, sustainable kick. If you get too long of a run-up before kicking the ball, you don't have any energy left, meaning that if you have too long of a wick, there's no energy left for price to make a swift, strong, and reliable move as well. So you want a decent, kind of short run-up before kicking the ball, just like candles with wicks. You want a decent, short, reliable run-up, aka a decent, short, reliable wick, before pushing the price towards the opposite side for an aggressive expansion. I hope you guys enjoyed today's video. If you guys did enjoy today's video, make sure to smash up the like button. Make sure to subscribe to the channel. And I'll catch you guys on the next one. Ciao, ciao.